on the higher time frame, this right here, this supply zone we had marked up, acted as liquidity. Okay, this was a wick, so this is invalid. Would I have taken this? No. Did I take it? No. I had this marked up, but I saw how quick price shot up. I saw it break it, and then I saw it wick it, and I saw it drop. That's liquidity. So let's keep going, keep showing you guys. So here you go. Okay, little example here. A lot of people can have their demand zone sit maybe right here, you know, or on this one right here. Depends how you trade it. Boom, demand zone right there. They're like, all right, you know, it's gonna play out. Why wouldn't it play out? Because there's wicks sitting right below it, and there's a deep retracement demand zone sitting right below it. So what happens with traders that trade supply and demand? They get stopped out right here. They're like, oh damn, alright, let's sell from right here. This also acts as liquidity because there are higher levels of supply sitting right above it. Also confluences with what? Imbalance sitting in it. So when you're trading liquidity, you have to know, you have to know how the market moves. You have to have confluences with it. You can't just be like, oh yeah, I'm gonna, this is a liquidity sweep, or like, I'm gonna trade this liquidity, I'm gonna trade this supply right here, take it down. It's not how it works. You have to look at the overall trend. So as you can see, people were buying from this area right here on the 5-minute that I marked up, but if you look on the higher time frame, like the 15-minute, we had a demand zone sitting below it, all the way below it. Okay, so once again, people could have been buying from here. People can buy in from all in here. I don't know why they would from here. As you can see, liquidity sitting below it. Liquidity sitting below it. Liquidity gets swept. Liquidity gets swept. Taps into the real level of demand, and then shoots up. Liquidity is pretty simple. This right here is liquidity. I like to see big wicks. It's like, that's liquidity in my eyes. This is liquidity in my eyes. All of this right here is liquidity, because there's tons of people selling in this area. There's tons of people buying in this area off this level. So price needs to come back down and take them out. Tons of people selling in this area. Price needs to come back up to take them out. And look at this. Price has this wick right here. Tons of selling pressure. Okay. Sells right here. They get, okay, nice. They're coming down. But immediately after that, it comes back up. Look at this. Takes all these sells out, and then sells down. That's how liquidity works. It's just accumulation of orders. So the banks see all these orders, it could even be their orders, but they need their money. They need to use our orders, retail traders, same thing with supply and demand. They need to use our money to make their money. Alright, so once again, liquidity being swept on the 5-minute, and then our demand zone forms right after the liquidity sweep. Okay, price taps into it and flies. That's how you can trade liquidity. pair it with your supply and demand. But you know, say you're, let's see, let me explain this for you guys. To use it as take profits, let's go down to the 1 minute so I can show you. You can use liquidity as your take profits as well. So what is this? Liquidity gets swept, then sells. So you get the idea. Big orders, big sells in this area. Price takes all those sells out and then makes this real move down to the demand zone, which formed right after this liquidity sweep. So liquidity in market structure gives you a whole story of the market. You just have to understand how to read it. You have to understand how to trade it. So I'll mark this up. Liquidity. This was the sell side liquidity. I'll just keep this all the same for right now. Okay. This needs to be taken out to the upside. Okay. We then have the downside being swept. Liquidity making a low, forms a fake high, a new low, swiping this liquidity. As you can see, this candlestick swept all the orders and then continues up, making the big impulsive move, forming our demand zone right off the liquidity sweep. So now indicating that we can buy off this demand zone. Where do we target? Well, we target the high or this next liquidity zone, just like this. As you can see, price played out perfectly. Simple. That's how I trade liquidity. That's how I view it. When price is consolidating, so say right here, okay, price in consolidation zone, right? Price then stops out all the sellers, and then price stops out all the buyers. As you can see, like I said, it's a whole story. You have to understand how to read it. So once again, accumulation, price stops out the sellers to the top side, and then immediately stops out all the buyers. Comes down, then also stops out this little demand zone. Why? Because this wasn't valid. This is not a valid demand zone. This didn't break this high, so this demand is not valid. This is just faking people out, accumulating even more orders to the downside. Okay, price stops them out, new liquidity. And now what do we look for? This as major liquidity. Let me remark that. So at some point, price is going to take this out. And what does it do? It takes it out. Because so many people are selling from this area all in here. You see, sells down, sells down, sells down, sells down. The banks need to come back up to grab all these sell orders. So what does it do? It does exactly that. So all these little wicks right here, and even trend lines, they're all liquidity. Same thing, liquidity sweep with the demand, just like I said right in a couple minutes ago. Liquidity sweep comes up, sweeps this liquidity, comes back down, taps into our demand zone, and then flies. Takes out this liquidity, takes out all this up here. It's simple, it's easy, you know, it's really not hard at all to understand. You just really gotta back test it, practice it, learn it. So I'll show you guys one more example of retail liquidity. Okay. So what do we have here? We've got a channel down, right? It's not the best channel, but it'll work. What does price do? Price doesn't break. Price breaks out of the channel. Okay, breaks all this liquidity right here, and also this trend line, this retail trend line that acts as liquidity, breaks this, and then comes down and breaks the bottom of the channel, making a new low, and then making a new high. So price swept this liquidity to the downside, left this little demand zone right here, and also left this liquidity sitting right above it, and also has all these orders of liquidity at the top. So people are selling here, once again people are buying here, stops out the buyers, taps into our demand zone, stops out the sellers. Simple, easy, got it. I'll be updating this way more, showing you guys more examples. That's really it for this section, liquidity. Hope you guys enjoyed. That's really it. Hope you guys enjoyed this course. Hope you guys enjoy all the videos that I provide you. Keep watching these over and over again. Study it, backtest it,